What's up guys, my name is Angelo. I think we can all agree this has not been an easy year. Apart from all the uncertainty surrounding the still ongoing war in the Ukraine, we're seeing record levels of inflation across Europe, as well as energy and heating costs that have multiplied. To make things worse, the euro lost about 17% in value against the US dollar within a single year. And yet, stocks have been performing very poorly, even when looking at their performance in euros instead of the dollar. As of September 26th, my own ETF portfolio, which I share with my wife, is valued at 157,900 euros and is down over 21,000 euros since the start of 2022. That's a performance of almost minus 12% in less than 9 months. In light of all of this, it's completely understandable if you either are completely motivated as far as investing in the stock market is concerned, or you don't even have that much money left over right now to even think about investing in light of the high inflation and the much higher energy costs right now. If, however, you do have some extra funds lying around that you've been thinking about throwing into ETFs for the long run, then this video is for you. Among other things, we'll be discussing the age-old question: should we buy the dip right now or wait for lower prices? I'll also tell you what I've been doing lately. Before I get into it, if you'd like to support me, feel free to smash the like button and to check out my links down below in the description, like the one to my favorite low-cost broker in Europe, Interactive Brokers. And as always, none of this is investment advice, just my personal opinion based on my own experience as an investor. Okay, I think we have to start with taking a look at the situation right now. So how bad is it really? As you probably know by now, my favorite way to invest into stocks is via a single ETF, the Vanguard FTSE World. It enables me to diversify my investment into over 3,700 stocks from all across the world without needing to make any bets on any specific country in particular. And it's quite nice to be able to do all of this via a single low-cost ETF. I'm planning to hold this ETF for decades, ideally forever, and to only sell some shares when my wife and I are in retirement and we need some extra cash. Over the long run, I'm expecting yearly returns of around 7 to 10% per year based on historical data, with a lot of ups and downs in between. And well, I probably don't have to tell you this, but 2022 has definitely been a down year so far. As I mentioned in the intro, my own 158,000 euro ETF portfolio, which I share with my highly pregnant wife, is down 11.94% since the start of 2022, or about 21,400 euros. When looking back one full year, we're down about 9,800 euros or 5.85%. And here's our full ETF portfolio with all of the positions. We started buying the distributing MSCI World ETF in 2017, and then we later switched to the FTSE World, the distributing version. And then since the start of 2021, we've only been buying the accumulating version of the FTSE World ETF. Here's a closer look at our total return so far. So in total, we're currently up 16.2% or 22,800 euros, as this also includes 5,600 euros in dividends that we've received over the past couple of years. And when looking at portfolio performance, another free tool I use to track my investments, we can see that we started the year at a portfolio value of 155,000 euros. We received 1,088 euros in dividends so far. We added 22,000 euros to our investments. Part of this were also dividends that we reinvested, and yet our portfolio value is almost the same after 9 months. Luckily, we started in 2017, so we're still up about 21,300 euros right now. However, if you started investing more recently, things are probably looking a lot worse in your own portfolio. When looking at just ETF, we can see that we haven't seen a single year over the past 10 years that's like 2022, with this many red months all within a single year. And while we may not be at bottom prices right now for this year, we actually reached those in June, we need to keep in mind that the euro actually lost a lot of value against the US dollar. So in dollar terms, we're actually down minus 23%, and we're actually at the lowest point this year right now. That's also why we've been feeling this crash a lot less than US investors. But then again, we have plenty of other problems to deal with in Europe right now. So as you can see, the market is down quite a bit so far this year. But that's all the information we have. I don't really see the point of going into all the possible reasons of why the market may be going down right now. There's plenty of other channels talking about that. All we know is that the global stock market is down about 13% in euros or about 23% in US dollar terms at the moment since the start of 2022. And if you look around you, you'll probably notice that very few people are particularly excited about investing into stocks right now. And that usually means it's a pretty good time to invest. We have no idea when exactly the stock market is returning to its all-time highs, since market timing is a fool's game. But just like every other bear market in the past, this one will pass as well. And let's not forget, ETFs are long-term investments anyway. You should have a time horizon of at least 5 years, ideally 10 years or more. So there is no point in analyzing the current market conditions, trying to figure out if prices are going to be higher or lower next month. All we know right now is that we're getting some nice discounts on our investments, meaning we're able to get more shares of the best stocks from all across the world at a lower price compared to just 9 months ago. Which is why my wife and I have resumed our one ETF investment strategy now that we finished all the baby preparation and the work on our new apartment. Using interactive brokers, I tried to buy the dip on August 23rd for a share price of €101.60 each. Then again on September 9th for a share price of 96.3. Again on September 16th with a share price of 94.67. And the last one was last Friday, where I bought another 11 shares at €93.49 each. I actually recorded this part last Friday, so let me quickly show that to you. Maybe helpful in case you don't know how to place an order on interactive brokers. So it's Friday, September 23rd right now, and the market is down quite a bit. So I'm gonna buy some more shares of the FTSE All World. So I'm gonna enter the ticker symbol VWCE, and there it is. And now I'm gonna place a buy order. So I have around €1,050 here, which I wanna fully invest. That's about 11 shares. You sadly can't buy partial shares yet. I'm gonna lower the limit price to 93.5 and I'm gonna place my order. And it was already executed. Let's have a closer look. And here we can see I bought 11 shares of the FTSE All World at a share price of 93.49 on average, and I paid only €1.25 in commissions. By the way, I'm using the tiered pricing model in the settings, which in my opinion is a lot cheaper, so make sure you change yours as well. There you have it. I know investing feels a lot harder right now and is a lot less fun compared to 2021. So kudos to you if you stuck to your investment strategy or if you've been buying the dip lately. And if you've been waiting for the market to bottom before you place any investments, look, that's fine as well. It's your money and ultimately you need to sleep well at night. Just keep in mind that trying to time the market only rarely works out, and when it does, it's mostly due to luck. There's no way to successfully predict future prices. Long term, the global stock market trends upwards in price, which once again I'm seeing as a discount opportunity to buy more shares and to grow my ETF portfolio at lower prices. And now that you know my personal opinion, I would love to know how you're handling the current situation. Are you still buying the dip right now, or are you waiting for something to happen before adding to your ETF positions? And are you seeing a large difference in how much money you have left over at the end of the month for investments due to the much higher inflation and energy costs? I would love to know in the comments below. Before you go off, if you enjoyed the video, don't forget to smash the like button, and if you'd like to support me, feel free to use my links down below in the description to all the best low-cost brokers in Europe. Not only that, I created several other videos that might be useful to you as well if you're new to ETF investing. I'm going to link the playlist below the video. Thank you guys so much for watching, have a wonderful day, and until next time.